Happy Sunday, everyone. This upcoming week has a good deal of volatility catalysts that I think will shape the future, the shorter term future that we see in the major index markets along with ETFs. We have key economic releases starting Wednesday of this week, and we also have the beginning of earnings season starting as early as Tuesday, I would argue, with the larger companies. Now in today's video, we'll go through not only these catalysts, but also share some different tools along with setups that you might find useful to navigate this volatility, not only throughout this week, but for now the rest of earnings season. Starting off first with the releases. On Wednesday, we have CPI being released. This is before the market opens. On Thursday, we have PPI being released, again before the market opens. You should notice a similarity by now. They're all taking place before the market opens in terms of these volatility catalysts. And Friday, we have retail sales also taking place before the market opens. So across the board, Wednesday, Thursday, Friday of this week, we have key volatility events all taking place before the open, which allows you to actually capitalize on that volatility throughout that day's trading session. That's powerful, and that's where intraday volatility edges will come into play. Now with regards to earnings season, if we move next, earnings season starts to me as early as Tuesday with Pepsi. Wednesday, Delta picks in. Thursday, we now have the beginning of the financials with JP Morgan and Morgan Stanley, again before the open. Friday, United Health, Wells Fargo, Citi, BlackRock, US Bancorp, again all before the open. So in all of these cases, you have the ability to see the volatility catalyst before the market opens, use that information to then dictate how you'd like to trade that particular day. Now if we move on to charts next, we'll start first with the S&P 500, taking a look really primarily on the financial sector for Thursday and Friday. First, if we look at SPY here, SPY still very much in a stage of deceleration, but most recently, prices started to break above the market pulse, where we can see the label going yellow, suggesting we may see a break to the upside with this accumulation that's been happening. We also have higher lows forming right here, with that 372.56 level being, in my opinion, one of the key supports that we've found. Now, in terms of breaking above to suggest a fill towards that 400 price mark, that to me would be breaking above this high right here, which is 393.16. So if through all of the events that we have this week, volatility can break above that price point, I think that opens up the 400 price mark as our upside zone that we think price could get to. Switching next to XLF here, XLF still very much in this downwards channel. For the most part here, we have, just using technicals, a pullback to the market pulse line and an overall bearish market pulse. You can see that with all of the red across our charts here, with the first green really being all the way at the beginning of 2022. So still very much a bearish trend here. If the volatility from the companies reporting continues to be towards the bearish side, this would be a nice catalyst looking for a break below that same 31 price level that's been holding as support. So in the financial sector, my bias is still towards the bearish side, but we also have price clues suggesting where price would need to break above to suggest a bullish continuation. XLF's chart looks very similar to SPY. Now with regards to trying to capitalize on these earnings, that's where we have a few different tools available. If I pull up our indicator page here, there's two earnings tools that I think you'll find useful. The first one is our pre-earnings analysis indicator. This is free for all Volatility Box members. Go ahead and log in and you can download it. This allows you to play moves into earnings. So this would be useful for setting up a trade on, say, Monday, looking to play moves into, say, Morgan Stanley's earnings, Citi's earnings, JP Morgan's earnings. You're looking to try and play the volatility rise, the implied volatility rise headed into earnings. For the day of earnings, this is after the information comes out, the report, you're looking to now capitalize on that volatility and the personality of a stock. That's where the smarter earnings indicator comes into play. That's right down here, and that's a free indicator available to everyone. You don't need to be a Volatility Box member. This gives you the tendencies of what tends to happen in a particular market after it reports earnings. This is for the day of. Does it tend to fill gaps? Does it tend to gap and go? What does the average expected move looks like? How many times do we break outside of the expected move? That's the kind of information you could gain from using the smarter earnings indicator. And finally, for the different economic releases that we have, along with what I imagine will be the general volatility we see as a result of each of these events, that's where I would use the Volatility Box, the hourly models, to take advantage of these moves. That's true on the index markets, starting with the S&P, Dow, NASDAQ, so on, along with even the actual stock sectors, things like XLF, when the earnings are released for the different companies reporting in that sector. That's where you can then take advantage of the intraday volatility levels, the hourly ones, inside of XLF, inside of Wells Fargo, inside of Citi, all of these different stocks, and capitalize anytime via the earnings that we breach any one of our volatility edges. Hopefully this video is helpful for those of you looking to trade and participate in this week's volatility. Again, I think there's a lot of interesting catalysts which will make this week a nice, interesting week for those of you that embrace volatility as one of the assets in your trading. Take care, everyone. Good luck trading this week and navigating the volatility, and I'll see you in the next update.